Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Equities are battling back from those overnight lows. The Fed was dovish yesterday, but the S&P and other benchmarks did not finish on the highs of the session that we saw after the Fed meeting and press conference. What we did see was lower action into this morning. And then the Philly Fed manufacturing beat. You had an Apple upgrade, really driving the market higher. Apple's up more than 3%. And again, the Fed was dovish. People aren't shy. They're jumping in here buying. It's a green light to buy equities, ultimately, is the way it's being looked at. But should they be up here? Well, the market's telling you they are, and that's what you got to take it for. Right now, the S&P is battling at yesterday's swing high after the Fed. There's some resistance here, and that's just below that 28.58 level, that swing high earlier in the week. The NASDAQ is trading out to a new high, and it's out above a major three-star resistance level that we have in the Morning Express. Check it out. Watch these levels. Today's tape and really how it develops, and if it can hold these levels, will tell you a lot and what it wants to take from the Fed yesterday, and if it wants to believe that dovish Fed is bullish. So watch this price action, and if it holds this ground, that's what you got to take it for. Moving on to crude oil, it's holding out above 60 bucks right now. This overall tape is strong. The risk sentiment around is very strong overall, and you're seeing this thing again hold $60. Yesterday's EIA report was very bullish. Didn't see a tremendous reaction, though it did finish well off the lows yesterday, consolidating below some resistance that we have at 61. But ultimately, we do think it's overvalued. A close below 59.60 we think could encourage some sellers to jump on board. So watch this consolidation above 59.60. That's going to be the line in the sand to watch if it goes below. Now, with gold, treasuries, they're trading very well, but gold and both of them, gold and treasuries, have given up some of that ground early from overnight gains. What we're watching most closely is gold right at that 1305, 1307 level. It got out above there a couple times over the last week and a half, but it could not really close above there. So now that we are out above it, we want to see that close above there. Still a lot of resistance, 1323. That's where the market fell back from. 1320 was the high of the session. And then for treasuries, for the 30-year, you're looking at this thing, very strong tape. You want to see this really kind of finish and hold this ground. Generally speaking, hold ground with the equity market doing what it's doing in order to say that they want to stay higher. If they start to if the treasuries start giving up ground, significant ground, when the equities move higher, we could start to see a continued reversal that could see some further selling there. Give us a call, though. We're here to help talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.